The Supreme Court has struck down President Biden's student debt forgiveness plan, meaning that millions of Americans will have to begin repayments in the fall. Here to provide some assistance and alternatives is Mark Kantrowitz, author of How to Appeal for More College Aid and Who Graduates College, Who Doesn't. Mark, welcome.
Thank you for having me.
With student loan repayments beginning in the coming months, what should people do to prepare?
Yeah, there are a couple of things that they can do to prepare. Um, Examples include updating your contact information with your loan servicer and on studentaid.gov. Note that your student loan servicer may have changed. About half of borrowers have a new servicer since the start of the pandemic. And the reason why you want to update your contact information is the U.S. Department of Education is going to send out a half dozen notices in the next 60 days before repayment restarts, giving your loan payment amount and the due date. You don't want to miss them because your payments are still due even if you don't get a loan statement or coupon book. Another thing that you could do is sign up for auto pay, where your monthly payments are automatically transferred from your bank account to the loan servicer. Not only does this mean that you'll be less likely to be late with payment, but you'll get a quarter of a percentage point interest rate reduction as an incentive. If you previously signed up for autopay before the pandemic, you're going to need to sign up again because they can't count on your bank account information not changing in the 3.5 years since the start of the pandemic.
Gotcha. Anything else that people should know?
Well, if you're struggling financially, there are ways to continue a personal pause, even though the payment pause and interest waiver has ended. The main problem with a personal pause is that interest may continue to accrue. These include deferments and forbearances, such as the economic hardship deferment and the unemployment deferment. There's also income-driven repayment plans, where if you have a more long-term financial difficulty, you have a job but just doesn't pay enough to repay your debt, the income-driven repayment plans base your monthly payments on a percentage of your discretionary income as opposed to the amount you owe. And if your income happens to be less than 150% of the poverty line, which will soon increase to 225% of the poverty line, your monthly payment will be calculated as zero. It'll be a zero payment that counts as a payment. Another thing that I would suggest doing to prepare for the restart of repayments is to prepare a descriptive budget where you track your spending for a month. You could use a spreadsheet, Mint.com, Quicken, or some other software where you enter every single expense and you label each expense as either mandatory, a need, or discretionary, I want, and maybe also in broad categories like food, housing, transportation, education, medical care, taxes, loan payments. Um, and at the end of the month, you're going to total up each of these tags and categories. Just by increasing your awareness of your spending, you're going to be more likely to exercise restraint in what you spend money on in the future. And you can also compare the total of your discretionary spending with the amount your monthly loan payment will be. And if your payment is less than that discretionary total, then you'll be able to cut back on some of your discretionary spending to cover the student loan payment. Otherwise, you're going to need to make some changes, maybe some difficult changes to align your loan payments with your income and your spending. So, in addition to cutting spending, you could try increasing your income, ask your boss for a raise, take on a part time job in the evenings or weekends, such as gig work. Another possibility is to switch repayment plans. A longer repayment term yields lower monthly payments, though you pay more interest over the life of the loan. You could also choose an income-driven repayment plan, which also will have a lower payment than the standard 10-year repayment.
Though President Biden's plan was struck down, there are still options for people who are trying to get at least a portion of their debt forgiven. Could you describe some of them?
Well, there are a whole bunch of loan forgiveness and discharge options that have been previously approved by Congress. You may have heard that the Biden administration has forgiven student loan debt for 804,000 borrowers in income-driven repayment plans. After 20 or 25 years of payments, that's 240 or 300 payments in an income-driven repayment plan, depending on the type of plan, the remaining debt is forgiven. And the Biden administration's recent announcement has to do with borrowers who were in income-driven repayment plans for that long, but the loan servicers hadn't kept track of all of the qualifying payments. And there were also problems with the recording of deferments and forbearances. So they made an adjustment and updated the counts of the qualifying number of qualifying payments. And a whole bunch of borrowers are now eligible to have their loans forgiven because of that. The loan servicer will contact the borrower to let them know if they're eligible. It's mostly going to be borrowers who were in an income contingent repayment plan at some point. Borrowers who were in the more recent income driven repayment plans like IBR, Pay and Repay, haven't been in repayment long enough to have made 240 or 300 qualifying payments. Another thing that you can do is to claim the student loan interest deduction on your federal income tax return. This is an above the line exclusion from income for up to $2,500 that you paid in interest on federal and private student loans. Now that your repayment is restarting, you'll once again be eligible to claim this on your federal student loans. And private student loans were always eligible because they weren't eligible for the payment pause and interest waiver. And this can save you a few $100s on your federal income tax return.
Are there any specialized programs that help perhaps government employees or teachers to pay off their student loans or get forgiveness?
Well, government employees are often eligible for student loan repayment assistance programs, otherwise known as LRAPs, and a variety of employers also offer LRAPs. You can ask your employer if they offer a benefit where they make help you make payments on your student loans. Um, in addition, there's a whole variety of death and disability discharges and public service loan forgiveness and teacher loan forgiveness. Uh, the death and disability discharges and a variety of other discharges are focused on your inability to repay your debt, whereas the loan forgiveness options tend to be based on service in a particular occupation or volunteer service initiative. And those can count towards loan forgiveness. Another initiative, two initiatives of the Biden administration. One is called the Fresh Start Initiative. If you were one of the 7.5 million borrowers who were in default prior to the pandemic, your loans will now be restored to a current status and the default removed from your credit history. And you have a year to start making payments on those student loans. Choose a repayment plan, and you'll be switched to a loan servicer for non-default borrowers. And this will also restore your eligibility for federal student aid. So you could go back to school to finish a degree if you default on your loans because you dropped out. It's a pretty good opportunity to get a clean slate. There will also be a 12-month on-ramp, which ends on September 30th of 2024, where there won't be any delinquencies and defaults recorded on student loans. They won't be reported to credit bureaus, and the loans won't be turned over to collection agencies. So if you have trouble getting started and you miss a few payments, it's not going to be a complete disaster. But interest starts accruing on September 1st, so it's best to make the loan payments if you can afford to do so. This is just a safety net for borrowers who are unable to restart making payments on their loans.
Do you have any advice for incoming college students who are looking to rely on federal loans to finance their education?
Well, the interest rates on new federal student loans, they're fixed rates and they change each year for each year's loans. The new rates are going to be a little bit higher than in the past, around 5.5% for undergraduate students, a little bit more than 7% for graduate students, and the Parent Plus loan will be a little bit more than 8%. So these are a bit higher than they've been in the past. Um, in general, you should limit your borrowing to what you need, not what you can, and aim to have total student loan debt at graduation that is less than your annual starting salary. If your total debt is less than annual income, you should be able to afford to repay your student loans in 10 years or less. So, live like a student while you're in school so you don't have to live like a student after you graduate.